بسم الله الرحمن الرحيم والصلاة والسلام على سيدنا محمد الصادق الأمين. Assalamu alaikum wa rahmatullahi wa barakatuh. Dear brothers and sisters, today's topic is quite interesting, which is about the internal control, and we will cover also the fraud principles. I will discuss some update about the fraud. Also, we will bring some issues in the ethics, which is quite interesting, and I believe it's very relevant not to jump direct to the internal control system and the IT controls and so on. It's good to have a sort of platform and routing of this, why it happened, why unethical issues is happen. So this is all will be covered in this chapter. So the threats of accounting information system, first is the natural and political disasters. Number two, software errors and equipment malfunctions, unintentional acts and intentional acts. And if you notice, intentional acts being highlighted with red color because it is the most risky and most have cost effective in terms of losing of money and so on, because it's intentional. So it guides us to say that intentional acts is the what we call the fraud. Okay, so ethics. So let's raise a few questions. First, what is ethics? Ethics is you behave ethically and morally, thinking about the others. There are some definitions about the ethics, so maybe in the class, during the class, we will have sort of discussion on this. But the ethics is all about the good characters of honesty, trusty, and so on. So what is ethics? What is ethical and what is not? Meaning that how we know the difference between this action or this act is ethical or not ethical. I believe this is not a built-in things. It has been grow up certain filters through the educational system, through the environment surrounding us, and through the rule and regulation, the law forced by the government and police and so on. So we know that a few things that is not ethical through by the culture and so on. So a very good example is the honing while driving the car. In some countries is normal practice, and it's kind of not considered unethical, but in the other countries like Malaysia and some Western countries, they consider it as unethical and this manner. So why some people act unethically? Actually, there is some motivations to do that, to do unethical, harming actions to others, either because of their bad intention. There is some forcement, some pressure from the surrounding environment and so on. We will discuss this in short while. What is ethical issues in business? Since we are talking about business, so most probably it will be affecting the money. So unethical management means stealing money, misappropriation of the money and so on. Okay, either long term or short term. Last questions, what is ethical issues in business related to technology? So we for the unethical issues or ethical issues in business related to technology, most probably will be acting unethically or conducting fraud through the online or through the computer base. The question is, how do managers decide what is right, what is wrong in business? So do they have a list of right actions and wrong actions, or do they have filter process to filterize the right and wrong? How they recognize the right and wrong actions? Once they recognized, how the managers achieve what is right? So how they ensure that only the right actions being taking place, and how to mitigate and reduce the wrong actions. So that is our entrance to talk about the control, system control in business. So system control in business is playing a role in mitigating the wrong actions and ensuring the effectiveness of the right process of the right things. Yes, through the policies and procedures and other actions. So now we are talking in general. We not yet talk about um, the IT control system and so on. Businesses having conflicting responsibility to different related parties. So we have employees, shareholders, customers, and public. Each one of those related parties, they have their own interest. So uh, employees, they have their interest is to have high compensation and salary. Shareholders is to maximize their profit and also maximize the company value. Customers is to have good good quality of the product and with lower price, whereby public, they need to have some social responsibility or some contribution by the company to the society, as well as to ensure that they are not harming the environment and so on. So all of this uh, interest cannot goes in the same direction. So when employees and public and customer uh, want to have more of their interest, customers, when they want to have lower price of the product or services, for sure that will affect the shareholders interest as well as the employee interest, and that same thing goes to the public interest, uh, will be conflicting the customers and the shareholders and employees interest. Therefore, every decision has consequences. Seeking a balance between the consequences is the manager's ethical responsibility. Managers should have this sense of responsibility to balance between the interests of each related parties to the business. Another thing is the benefit from decision must outweigh the risk, and no alternative should provide greater benefit or less risk. So the benefit and risk should be balanced, and we should also say that this decision is the best decision which balance between the benefit and risk. No, and there is no other decision that can be give greater benefit with less risk compared to the decision the management take. Under the definition of corporate ethics in the Conference Board in 1990s, the they have ethical issues in business. They classify them to four dimensions: equity, rights, honesty, exercise of corporate power. So in equity, for example, they put executive salaries, comparable worth, product pricing. Rights, they put diversity, equal employee opportunities, and employee health screening and so on. Honesty, employee and management, conflicts of interest, security of organization data and records, and as an example for exercise of corporate power, political actions committees, workplace safety, product safeties, environmental issues, and so on. So if you notice, those dimensions are covering the main uh, issues under the for each related parties, the shareholders, the employee, the customer, and the public. So they try to classify them into those four dimensions. It's good for you to go and check the full article to find out better understanding. Privacy and ownership in the personal information industry is one of the main issues that should be considered when talking about ethical issues in business, and security involving accuracy and confidentiality. So how long you should keep it confidential, to whom it's allowed to be accessed. So the questions is, what can an individual or organization own from that personal information? Equity of access issues related to the economic status, culture, and safety. And then with this environmental issues, artificial intelligence with more access, more interaction with the IT and so on, that is reduce the privacy of the information. All of these ethical issues in business drive to the question, what is the role of regulation in ensuring the ethics in business? Sarbanes-Oxley Act, Sections 406, requires public companies to disclose to the Security Exchange Commission if they have a code of ethics that applies to the CEO, CFO, and controllers. And if they don't have, they must explain why. Now, let's move to talk about fraud and accounting. Sarbanes-Oxley has had tremendous impact on external auditors' responsibility for fraud detection in financial audit. I think we did mention this in the auditing subject when we mention about audit assessment, trying to detect the fraudulence and so on. So the objectives of Sarbanes-Oxley with regard to the fraud and accountant is to ensure the blind fraud consideration into all phases of all audit process, which will have direct impact to the accounting.
Fraud denotes a false representation of material fact made with the intention to deceive, mislead, and persuade another to rely on this false material fact in their determinants, meaning that the fraud means the false representation of some material information and have intention to mislead those users of this information. There are five conditions to call the misleading or any false representation fraud. Number one, false representation. It should be false representation of either false statement or disclosure. Material fact, so its fact must be substantial in inducing someone to act, meaning that this information is material, it's significant, and people will rely on it. Okay, so like financial statement. Intent to deceive, there is behind intention to deceive people, and the one who commit the fraud, he has the intention to mislead the users of the information. Okay, so then number four, justifiable reliance. Misrepresentation must have been relied on, so there is some people will use this information and change their decision making. Injury or loss, so it will cause a loss and injury must have been sustained by the victim. Fraud in business has a more specialized meaning, meaning that the fraud in business compared to the fraud in individual have different techniques and different effect. So the individual normally when one deceives someone else individual, so the effect will be not that much one thing, and the techniques that will be used is different compared to the company. So but for business fraud in business, normally companies may misrepresent some of the financial statement figures or misappropriate use of the assets with dishonesty to deceive the users of the financial statement or the owners of the company. So there are two main points here: intentional dishonesty, assets misrepresentation, or financial data manipulation to the advantage of the deceiver. Number two is the white collar crime. What we mean by white collar crime, meaning that the one who will commit the fraud in business, normally they are CEO or the top management of the company. It doesn't mean they are wearing smart and wearing the tie and so on. So they are very cold and they didn't make their hand dirty compared to the individual. Sometimes they need to change their color, change their face. They steal they go and steal something. So they directly involved in stealing the assets. Deflecation, it has deflecation. Deflecation means they try to make some noise with the about the shares price and so on. Embezzlement and irregularities, so they try to make something not regular, not you get used to. We can categorize the fraud in business into two groups based on the one who commit this fraud. First is employee fraud, and second is the management fraud. Employee fraud is the generally designed to convert cash or other assets to the employee personal benefits, like cashier try to steal some money, or take those who are working in the let's say the warehouse, they steal some inventory and sell it out. There are other types of fraud, employee fraud, doing more sophisticated techniques by misleading some what we call documents and try to get commission from outsider like suppliers or customers. This is also under the employee fraud. Whereby the second one is the management fraud, does not involve direct thiefness, and it is more harmful as it's usually involve material misstatement of the financial data. So management fraud is more effective, it's more harming to the company, and normally they are stealing without making direct thiefness, or they don't make their hand dirty. So they just mislead into the financial statement or financial figures. Then through that they can get their own. Management fraud committed at levels of management above the internal control structure and system frequently involve overstated financial statement result, misrepresentation of assets often shrouded in complex transactions involving related third parties. So that's the main three categories shape the management fraud. One is the internal control is not covering to structure and control the management fraud. Second is normally, but not always, trying to overstate the financial statement in order to increase the management bonuses and compensation. Then lastly, the misrepresentation of assets when they, let's say, disposal some useful assets in order to sell it with cheaper price, then they get the commission with third party. There is another term for misleading of or false representation of financial statement called cooking the book. Cooking or massaging or manipulating the figures in the book of financial statements. And another issue we need to consider with the fraud is the conspiracy or the inclusion in the commission of the fraud is difficult to prevent and detect, especially in the when we talk about the staff or the employee fraud. So when we have that, then it is difficult to control and detect or prevent this fraud due to it's not individual employee doing it, but it is more people are involved in that fraudulent act, and it will be also difficult to discover it and prevent it. Based on the fraud triangular factors theory, there are three factors should be take place when for people to commit fraud or the stuff. So number one is incentive. Number two is rationalization. Number three is the opportunities. So incentives, the staff is having some what we call financial incentives. He or she want to buy something new, iPhone or something. They cannot buy it unless they commit the fraud. Or they have financial pressure, which is also incentives. So let's say they need to pay the outstanding bill or installment. They want to send their family to a hospital, but they don't have that enough money for that. So they have the pressure to commit fraud for that. Then the second one is rationalization of the of committing fraud. So let's say the staff is justifying some of the example is that let's say the staff feeling that oppressed and they work hard, but the salary is not equivalent to what they do and what they the time they work. Maybe they are not satisfied with the salary, not satisfied with compensation or bonuses, so they justify they owe that money that I steal or I commit fraud to they owe it to me as a staff. And if you notice, incentives and relationalization, or we call it justification, is both are psychological individual factors, whereby the third one, opportunity, is about the internal control system. So it means that there is an opportunity and chance and ability to commit fraud. So there is a weaknesses on the internal control system in the policies and procedures that allow this staff to commit the fraud. And this triangular factors of fraud is more details. So let's say fraud triangular, we have, as we said, we have opportunity, relationalization, and we have pressure. Here in the pressure, under the pressure, we have financial pressure, lifestyle, emotional, and we have in this side is the management characteristics and industry conditions based on those facts, and then rationalization, justification. There is some fact justify their stealing, lack of personal integrity and attitudes, and then we have convert in terms of the opportunity. They have the ability to convert the assets or the value of money to their own interest. They have the ability to commit it, and they have the ability to conceal or hide their commit. So I can discuss the Islamic perspectives on this, because if we have are a good Muslim, even we have financial pressures and so on, we will bring another dimension, which is fear of Allah, thinking about the sin that we will get and the punishment in the day of judgment. So that is also will be affecting the lack of personal integrity and the attitude, and also will not commit the fraud, even we have the opportunity and the financial pressure. Okay, so this figure 3/1 is talking, if we have ethics, then opportunity and pressure will be less effective, and if we have less ethics, then pressure and opportunity will push and be strongly affecting the to commit the fraud. And instead of ethics, we can say if we have Islamic characters. After discussing the fraud in general and how it's affecting the business, and the two categories of the fraud based on the committed person, is either it is the management or the employee. Now let's talk about computer fraud, which is when the computer is used to commit the fraud. So in this case, we call it computer fraud. In computer fraud, it can be classified based on the framework of the processing. So we have fraud input, we have fraud in the processor, and fraud computer instruction, and also fraud in the data in terms of storage or managing, and fraud of the output. So we will discuss this in a short while, but I put here two link of videos, so please you can go through, and you can go to YouTube, by the way, to see there are some Hollywood movies about the computer fraud and hacking and so on. It's good to see and see how capable is the hacking or the computer fraud. Okay, so this is also a 2020 fraud report to the nations. It's based on 125 country, based on I think 70 something, over 70 cases of fraud. So they reported some cases and do some analysis in terms of statistic and so on. You can go through the report yourself, but maybe in next week class we will have a look in some very indicators on this report. Now we will move to a new topic, which is internal control system. So after we discuss the fraud in general, we discuss also the ethics in general. We also bring it to the business and how it's related to the accounting, and we then we discuss it on the factors of the fraud. Now we are going to discuss how we can, what is the mechanisms to control and mitigate the fraud, which is based on the internal control system. The internal control systems consist of policies, practice, and procedures to achieve four broad objectives. Number one is safeguarding the assets of the company. Two is to ensure the accuracy and reliability of the accounting record and the information, and then promote efficiency of the company operations. Number four, measuring the compliance with the management's prescribed policies and procedures. If we notice, then this too is mainly fighting against the fraud, because we said the fraud is about either misrepresentation of the financial statement or manipulating the figures in the financial statement, which will be fighted by this is the under these objectives, and also misrepresentation or misappropriation use of the assets. So it's the under this objective. So the internal control, there are two main objectives fighting against the fraud. Okay, public companies management responsibility are codifying in section 302 and 404 of Sarbanes-Oxley. The section 302 requires management to certify organizations' internal control on a quarterly and annual basis. Section 404 requires the management to assess internal control effectiveness. Modifying assumptions to the internal control objectives. So we need to understand that the management is the person responsible for establishing and maintaining the internal control systems, and with reasonable assurance. What we mean by reasonable assurance, meaning that the management should analyze the cost and benefit. So the cost of achieving objectives of internal control shouldn't outweigh the benefit. Okay. Methods of data processing control techniques vary with different types of techniques. Limitation of there is a possibility of errors even with the internal control system. Avoidance, people sometimes or employee will try to avoid the more controlling and procedures and so on. Management override, normally with lack of philosophy of belief of internal control, the management will normally override the internal control system. Changing conditions, meaning that sometimes you establish internal control with some conditions, and then with the time the condition change, so you need to update and maintain internal control. That's why beside the establishing internal control, also the management is responsible to maintain the system of internal. In control techniques, the absence or weaknesses of control is an introduction of the assets destruction or thieftness and corruption or disruption of the information system. And this will lead to three types of controls techniques. Number one is preventive control, which are passive techniques designed to reduce undesirable events by forcing compliance with the prescribed or desired action. Please take note that the preventive errors and fraud is more cost effective than deducting or correcting those errors. So better to have strong preventive control than deduction and correction, because it is cost effective. Then deductive control are designed to identify undesirable events or actions that get away from the prevent controls. Corrective controls are action taken to reverse the effect of errors detection and ensure that it will not happen again. Preventive and detection fraud. Number one, or the objective number one, to make fraud less likely to occur, make fraud difficult to commit. Three, improve the detection, and number four, reduce the fraud losses in terms of value of money. This figure is explaining that the internal control trying to safeguard the assets and from the undesirable events. Undesirable events is those attacking the internal control. So we have access, fraud, errors, misachieving, and so on. This figure explaining the three levels of controls, which is preventive, deductive, and corrective. And we can see here when we have undesirable events or actions happen. So the first line of defense is preventive control, trying to prevent the undesirable event to happen. So it's pre-action or pre-controls. If some of these undesirable events go through the events and happen, so we have deductive controls trying to deduct all of these undesirable event and actions, and then if we deduct in any of this event, then we try to have feedback on it and try not to correct the effect of it, and also correct strengthen the deductive and preventive controls to ensure that this undesirable events and action will not happen again. Let's talk now about the COSO internal control framework. There are five main components of the COSO internal control framework. First, control environment, risk assessment, control activities, information and communication, and monitoring activities. And it covers the three main areas: the operation and the reporting, as well as the compliance. And in this side, it means it's all over the levels of the company, entities level, divisions, operational units, and functions. So that's the general idea of the COSO internal control framework. By the way, I believe the student who take the auditing and also take the management accounting, for sure they take deep emphasis on this internal control, COSO, and so on. So this is another diagram to illustrate that information starting from the control environment, control activities, and risk assessment, information communication, then monitoring and feedback between all of these components. This is also another figures to illustrate and give better understanding. So we have in this paradigm, the internal control environment is the platform for all of the other component of COSO system. And then we have risk assessment should take place. After that, we will place and establish control activities based on the risk assessment result. And then we need to have effective information and communication up and down between all of these activities and component. And then we need to see the holistic view of the COSCO component of internet. Internal control, I will not go in details on this, so please, if you have lack of information on this, you may refer to the textbook, because we did discuss it in deep last semester about the control environment, should set up tone of organization and influence of control awareness, talking about that organization should have management philosophy, should establish sort of good model or good role model of the control system and so on by the management and as well as the employee. So talking also about risk assessment, identify, analyze, and manage the financial reporting risk. Control activities are policies and procedures to ensure appropriate actions are taken to deal with the identified risk. And then monitoring is the process by which the quality of internal control design and operate can be assessed and have feedback to enhance the other control activities. Information. This picture I found from the internet, but it's quite meaningful, and also it represents what is the real objectives and function of internal control. So internal controls is the tool to manage and balance between the three dimensions of the management. First is the objectives. Where do we want to go, or what the management want to achieve, and performance, what we achieve from the objectives, and the risk, what can be goes wrong, or risk that can stop the effective operation to achieve the objectives. Under the event identification is the identifying the incidents or any event or practice, either internal or external, that may affect the achievement of the organizational objectives. There are key management questions that the management should answer to identify that event. First, what could go wrong, meaning that identify the type of the risk or that event. How can it go wrong? Mean we try here to find what is the reason, what is the cause of this risk or event, and then what is the potential harm, so we assess the financial effect of that harm or wrong things. Then what can we do done about it? What's the reaction that we should prepare to either deduct or prevent or even correct that event from being done again, or trying to minimize the potential harm. Okay. To have better understanding of the identification of events process, it's good to have an example. So we have here a chocolate manufacturer that relies on sourcing its cacao beans from the certain region in Africa, which is giving good quality and as well as having reasonable price. So asking the questions, what could go wrong with this supplying of cacao bean? We may not get enough supply cacao beans to meet our customer demand. How can it goes wrong? Either due to the weather conditions or due to the flood, due to maybe possible of having civil war there, then we cannot get sufficient supply. So what is the potential harm? The cost of our cacao beans will go up due to the limit of the supply, and it will affect the price of the product that we sell. And what can we do about it? We can maybe buy having what we call buying cacao beans for the future, meaning that we have reserve raw materials of cacao. The risk assessment is the most difficult step for organizations. Reason? Because once the organizations identify what can go wrong, organizations need to think about the probability that it actually will happen, means what goes wrong. And also, they need to estimate the cost of this wrong things happen. This is truly can be an overwhelming task with a lot of uncertainty. Okay, I give you an easy example about the COVID-19. Now we can see that the the drop of the sales, especially with the hotels industry and so on. So I believe when they assessed the risk in 2018 and 2000, early 2019, they did not expect this happen. They expect the drop of the some regions like China, because they already have some indicators that they have start to have COVID-19 over there, but they didn't expect that all countries will have that. So it is overwhelming and with a lot of uncertainty. So that's why we call risk assessment is very difficult step. Risk assessment. Risk is assessed from two perspectives. The first one is the likelihood, the probability that the event will occur. So is it 30%, 50%, 90%? So we need to assess in terms of the likelihood of happening of that risk. Next, the impact. How much is the harm of or the influence that if this risk happen, how much it will occur loss, how much the loss that the company will carry. So estimate the potential loss if the events occur. There are two types of risk: inherent risk and residual risk. Inherent risk, the risk that exists before the plans are made to control it. And residual risk is the risk that is left over after you control it. So it means the inherent risk, we know it is there, it is from the nature of the business or the account. So we know that there is a risk there. But residual is the risk that is left over after you control. The risk assessment can be looked from two sides. One is qualitative and quantitative perspectives, providing that they have enough data, I mean the organizations. So qualitative perspectives, management can simply assign high and medium or low risk based on the discussion, the collective discussion by the management, and they set up if this happen, this one is considered high risk, this one is low risk if it happened. So they classify the risk based on their perceptions, whereby the quantitative is the analysis can examine the probabilistic techniques to model the cash flow or earning based upon the risk identified. So quantitative is based on how much is it, how much the loss that will happen. So we assess its high risk or medium risk or low risk, whereby qualitative is based on collective discussion by the management. After we identify and assess the risk, we will come to the risk response. So we have four main possible response. One is accept or reduce or avoid or share the risk. So if we accept the risk, then we need to do nothing and accept the likelihood and impact of risk. So let's say you know that there is a risk of getting wet if you walk under the rain. So and you just walk and accept the likelihood to have flu, risk of having flu, and your dress will be weighted. So that is the accepting action. Avoid, don't doing nothing to engage in that activity. So you stop walking through the under the rain. You stop the action from the first place, and reduce the risk, implementing effective internal control. And the example of it is to try to use an umbrella. So in that case, it's considered a control to minimize and mitigate the impact of the risk of getting wet and having flu. Sharing the risk, buying an insurance or outsourcing of hygiene. It means that you try to let's say reduce the sharing the risk and the impact of risk by buying an, let's say, health insurance to if you get what we call if you get flu, then you can go and have medical treatment without if, with the under the insurance coverage. Okay, now we reach to the third component of COSO framework, which is control activities. We have a list of activities under the control system. One is proper authorization of the transaction and activities, and then we have segregation of duties. We have project development and acquisition control, change management control, design and use of documentation and record, and then we have safeguarding assets, record and data, and then we have independent check on performance, which we call it monitoring or auditing. So the main function or main activities, control activities, is the proper authorization, proper segregation of duties, proper documentation, and proper independent check on performance. Now we look into the segregation of duties. A good internal control requires that no single employee of company have too much responsibility over the transaction and business process. Segregation of duties prevent an employee from committing and concealing fraud. So just imagine if we have two staff, each one is doing separate a part of the transaction. So if one of the two employee have the intention to commit fraud, and the other staff can stop him unless they are doing what we call inclusion fraud. Three functions should be segregated: the custodial functions, recording functions, and authorization functions. So the one who custodial function, and meaning that the one who handling the cash, handling the inventories, or writing a check, receiving the check in the email or mail. So those guys shouldn't be the same person who are recording and keeping the bookkeeping. So preparing the source of document and so on. And also the one who authorized these transactions shouldn't be also the same person. This one also a good example. Accounting employee A is the he is maintaining the cash balance bare book, so he is the one who are recording. And the independent internal verification, maybe assistant treasurer, he's keeping authorizing and authorizing the transaction, and the cashier is the one who custodial of the assets. From system perspective, there is a segregation of duties as to divide authority and responsibility between the following system functions. Number one is system administration, network management, security management, change management, users, which they use the users of the software or the system analyst, programmers, computer operation, information system librarian, and data control. So all of these functions should be segregated, not necessarily all of it, but mainly I believe the users, and the users mean those who are key in the data or acquiring the output of the system, and the other IT system functions. Now let's say under the monitoring component, we have perform internal control evaluation, which is normally done by internal audit, implement effective supervision, use responsibility accounting system by using the budget, monitoring system activities, track purchased software and mobile devices, conduct periodic audit, either internal or external or even network security, employ computer security officer, engage with forensic specialists, install fraud detection software, and implement fraud hotline. So all of these activities or actions can be practiced uh, just to ensure the effective monitoring and checking process. After discussing the internal control framework and the 5 components of it in details, let's move to discuss internal control concept and IT controls related to the computer environment have 2 dimensions. One is general control pertain to entity-wide IT concerns, meaning that the let's say the software and security, Wi-Fi security, CCTV, all of this is IT controls within the backup, also backup of the data, consider general controls, because it's not specific to specific system. It's not controls to the specific system or software. So application controls ensuring the integrity of specific system. First to the IT general application. General controls applied to a computer application and consist of combination of hardware, software, and manual procedures that create an overall control environment. So within the organization, it's not specific to the one specific system, because as we discussed in the earlier, that we have accounting information system, we have the management information system, and we have different subsystems within it. So general control, IT general control is not for specific system, is for general. And we give example for Wi-Fi security, password for Wi-Fi, the security like for the software and hardware, and the backup and so on. So all of that is general. Discussing the IT general controls, we should link it to the physical control related to human activities. So this figure is trying to show 3 control objectives. The first one is based on 2 segregation of duties, the authorization and processing. The second one is based on the transaction of authorization, custody, and recognition, recording. And then if you notice that in the control objective 2, we spill out or break down the processing into taking care of the assets or the custody and the recording. And then control objective 3 is to for the recording is to have three levels. So we spell out or break down the recording into journal, subsidiaries, and subsidiary ledger and general ledger. So with this, we can create within the system or the software, we can create what we call segregation of duties between those. So accounting record consists of source document, journal, and ledger which capture the economic core and provide an audit trail. Access control ensuring that only authorized personnel have access to firm assets, and independent verification procedures are checks to identify errors and misrepresentation. So those are also physical controls related to human activity. Management can assess one individual performance, and second, system integrity, third, data correctness, including reconciliation batch total during the transaction process, comparing physical assets with the accounting record, reconciling subsidiaries accounting with control accounts, and reviewing the management report that summarize business. Now let's talk about IT application controls. IT application controls are specific controls unique to each computerized or software application, such as payroll, sales, order processing, and so on. So we will have detailed discussion about this. We will discuss it based on the information system framework, which is input control, processing control, and output controls. Okay, so before we go on, let us discuss the relationship between general and application controls. We can see here in this diagram that within the general controls is the outside general controls about risk of unauthorized changes to application software, risk of system crash due to no electricity, risk of unauthorized master file update, which is related to the database. So we need to have backup for general system, and risk of unauthorized processing. Let's say the hardware is not updated, or the slow, or all the hardware, so we need to update. That's the general control, whereby the application, which is the application software within the inside the ship, we can see here the sales application control, other cycle applications, and so on. So it's for specific application. Now, as we said, internal control concept and techniques is IT application controls are associated with applications, and it's based on the three main element of the account of the information system process framework, which is input control, processing control, and output control. So let's start with input control. We need to understand that garbage in, garbage out. So if we allow everything to be key in and to the system or to the BC, then for sure we will get the garbage out. So we input control is to ensure that only authorized, accurate, and complete data being key in. So input control designed to that the information entered is only by the authorized people and it is accurate and it is complete. There are several techniques in input control. One is field check, which is characters in field are properly typed. So we check the field in the type of field key into the system. So let's say we this felt like the key in the amount, but the key in it should be in numeric form. So if they key in alphabet, so that will it is one of the input controls to don't accept the transaction. Sign check mean positive or negative. So the system will not accept, let's say, negative sign if it is receiving cash. Okay. Limit check, test of numerical amount against a fixed value. For customer, let's say for each customer, we already set a master list of each customer, so they have a credit limit. So if we exceed that limit in fixed value to that specific customers, so the transaction will not be processed, will not be key in. Range check, test numerical amount against lower and upper limits. So we have range of, let's say, from 3,000 to 5,000. This quantity, those items can be ordered. So the system will not process the key in unless it is within this. Size check, input data fit into that field. Okay, then completeness check, there are all of the information should be verified and key in, not some remember normally when we open account or order something, there is some red stars with some blank to key in information to key in. So that is we cannot process the key in transaction unless we key in that information. So that is what we call completeness check. Then validity check, compare data from transaction file to the master file to verify existence. So let's say you are keying certain amount of transaction, then they will check the balance of that transactions, especially the credit or account receivable or the inventory. Reasonableness test, reasonableness test, correctness of logical relationship between two data items. So let's say you are keying certain information or transaction of account receivable, but then you key in the transaction as cash or account payable. So it is not reasonable to accept that key in. And then check digit verification, recalculation, check the digit to verify data entry error has not been made. So let's say you key in 3 or 5 items and the value for that items, the total should be a certain amount. If you key in the total wrongly, then it will not accept that input control. Check digit, we let's put some details about check digit test because it's one of the very powerful control. So it is control that is added to the data code when originally assigned, allows integrity to be established during the processing and helps prevent two common errors. Those two common errors. One is transaction errors occurred when the extra digit are added to a code and digit is omitted from code or digit is recorded incorrectly. So it is ensuring that transaction those not happening. And then the second common error is transaction errors occurred when digits are reversed. Reversed means you write from left to right or right to left. So it will not accept. Okay, additional input controls the prompt warning that we receive when we key in wrong data. So remember all of these techniques, control techniques in input we mentioned just now, it's related to if you key in something wrong, you will get prompting or warning message. And also batch processing about sequence check, testing of batch data in proper numerical or alphabetical sequence. Batch total also summarized numerical values for batch of input record financial data, hash total, and record account. We will discuss those three techniques: financial total and hash total and record account on the processing control later on. And for batching warning, as I said, system prompts you for input will give you a warning message. Okay, closed loop verification, check accuracy of the input data by using it to retrieve and display other related information. Okay, now we move to processing controls. Processing controls are specific application and procedures control often programmed into the software to prevent to prevent and deduct and correct the processing. The first techniques is data matching. Two or more items must be matched before an action take place. Field labels, ensuring the correct and most update files is used. Recalculation of batch totals, which we will discuss the three types of recalculation of batch total: the financial total and the hash total and the account total. Cross-voting verifies accuracy by comparing two alternative ways of calculation of the most total, of the same total, sorry. Zero balance test for control account like payroll clearing. So we are expecting to have zero balance of the amount. Okay, then right protection mechanisms protect against overwriting or erasing data. So we don't allow the system will not accept any modification on some files, okay, or some data. Concurrent update controls prevent errors of two or more users update the same record at the same time. So especially with the relational database that use the or several store using the update. That's why sometimes when we go to, let's say, to buy something from the system, from the shop, sometimes it takes time. The reason is because maybe someone is ordering the same item, so they allow especially for the when you go to buy DG or your mobile number and so on, so the process will stop, especially for numbers when you buy a new SIM card. So because someone is processing one transaction, so it cannot be processed in the same time. System will have sequence in order to ensure that the update of the numbers solved and so on. Okay, so batch control manage the flow of high volume transactions and reconcile system output with original input. Run-to-run controls monitor batch from one process to another. A hash total is the sum of the non-financial field to keep track of records. So This example is explaining the three types of batch recording, which is financial total, and the hash total and the account total. So let's say in this example we have 8 transactions need to be recorded. So 8 transactions is the total is 8 for the 8 transactions. So, for example, if we key in 7, the system is matching this. So, 7 transaction will not be accepted. It's not complete in terms of number of transactions. So we call it uh, processing control of the using the account total. And also we have number 2 is the financial total. So if we wrongly key in any amount, we will not get the same amount of 141,652,000. So that is the financial total, which consider one of the processing control. And then the third one is the hash control, which is using the payment voucher or the invoice number, serial number, and so on. So if we wrongly key in one transaction twice, it will not discover here because we are keying eight transactions, but it will discovered by the amount, by matching the amount with the hash amount. Uh, Keep in mind that the hash total control is the hash total is meaningless. It doesn't mean anything. It's just kind of process to control the process to ensure the accuracy of the transaction. This is just to illustrate what we have just mentioned just now. The hash total is about the it's about numbers, serial numbers. So we total it and we get total that help to the system will process that control, and we have record account that is the that is what we call also what we it will help to also call it total record of account and total control of the financial total. So we can patch the number, we can patch the transaction code, and date can be used. Depends on how we format the system will create control, but it will be hash under hash total. Okay, because it's meaningless. The only meaningful is the control of financial total and control of record. Okay, so this is run to run controls is updating the system after each transaction. And if you notice here we have error file in each update. This error files will be used as update as feedback to assess and ensure the errors will not happen again. Okay. Audit trail control, ensuring every transaction can be traced through each stage from processing the source of document to the financial statement, which is the output of the process. Okay, so how about in the system using the information system? So also every transaction or process through the system, including the automatic ones, should be recorded on a transaction log file. What is transaction for log file? Is a sequential record for all changes made to the database while the actual data is contained in separate file. This transaction log file allow the system to process what we call audit trail control, because it records everything. It records sequential update or changes in the master file. So in this diagram, it's explained how the log transaction log file works. So example, we have acquired from users for some information so it will first the changes is recorded into the log file, and then the query returns to the users, and then the changes is updated to the data file or to the master file. What is, if you notice here in the log file, we have transaction 13 change happened in, let's say, in this number LSN 95, and then we have also another transaction commit, um, and then we have also begin transaction 13 begin, and then change, and then begin. So all of this sequential can be used as a trail audit. So to check the system will use it to check the accuracy of the updated data file, and also it carry good information whom the person who do it and the time they do it. It will keep a lot of information in terms of the type of inquiry. Is it changing, or is it commit? Is it begin of reading? And the time, what is the transaction to being changed and update, and also whom the one who commit that update. Okay, so this one also just to explain transaction log to preserve the audit trail. Here we can see that we have here in the input phase we have transaction come from documents, source of document, and then we have processing, computer will process validating program for, we call it input validation or input control. Then we in the processing phase we have when we have update validating the transaction, we will see here the process application will update, will send to the error files and also to the transaction log journal, and we can trace the same transaction with the three files. Validate the transaction equal successful transaction plus error transaction. So those three files can be validated and checked in terms of the data unit. Then we have output phase, which we will discuss. So output controls, the objectives of the output controls is to ensure the validity, the accuracy, and the completeness. There are two major types of output application controls. One is validating processing result by activity or proof of listing. Then second is regulating the distribution and use of printed output through forms, so controlling the forms of output, renumber the forms or the output, authorize the distribution list to whom they should be sent and distributed those output, and sharding sensitive documents, mean keeping some sensitive documents away from everyone. For availability controls, it means that ensuring the availability of the data, ensuring the availability of the software and system process. Okay, number one is preventive maintenance, ensuring that there is maintenance to prevent any risk related to the data storage and also the infrastructure of IT and so on. And then flood tolerance, use the redundant component, meaning that ensuring that if there is a likelihood for some risk to happen, then we use that flood tolerance to set up the availability of the controls. Then data central location and design, ensuring that the location and design of the building that we are keeping the data and the hard disk of the data are very secure and safe. So instead of having it on the floor, in the first floor, we better to have it in raised floor. Fire supervision, air conditioning, uninterrupted power supply of the electricity, and surge protection, and also to have offsite backup or offsite keeping of the backup files. And then batch management and antivirus software, backup procedures. We will discuss this in more details after a while. And we have the incremental copies all items that have changed since last partial backup or full backup. And then disaster recovery plan using the cloud base or the hot site. This one also the one of the common techniques used, the cloud-based services, especially with the working from home due to the COVID-19 and so on. And then lastly, business continuity plan, how to resume all operations, including the IT. Okay, there are two opinion about having master file backup controls, whether it is under general controls or application controls. Generally speaking, it is either in the application or the general. If we apply it, then it is okay. This diagram or this figure explaining the techniques of grandfather, father, son backup, which use when we have sequential master file. So let's say we have three layers of master file. So we use the update in this sequence. Son, and we update the son file and update the father file and the grandfather file. Okay, so also this is another example to explain the how we update based on son grandfather's father son techniques to update. So son will be updated in daily base, and then the father files will be updated based on each week. So every week, every Friday, it will update the master file of the father level based on the daily update, and then the grandfather file will update based on monthly, based on the weekly update. Another backup controls is destructive update approach, leaves no backup copy and requires a special recovery program if data is destroyed or corrupted. Okay, so in this diagram we can see here we have the update of transaction files and so on. So here we don't update, but we have system to special program or software to recover the. So backup procedures for batch system using direct access files. We can see here when we have the transaction file update, we update the program, and then we have the updating the master file. Then backup program. This is the system or the special recovery program, either the recovery program which handle backup file, backup master file. Okay, this is in batch, whereby for real-time systems scheduling the backup at specific real-time daily interval or weekly interval. So it will update the file every, let's say every day or every 2 weeks or every month. So this one is based on the technique that we mentioned, the grandfather, grandfather, father, son. This comprising between the system controls and organizational controls. It's not based come from the textbook, this textbook, but I bring it from different textbooks. So, but it is very good, I believe, to bring you the understanding to compare between the preventing and deduction controls in this within the system or the IT controls and organizational control. Okay, so let's take one of the example. In the organizational level, we try to create a culture of integrity, and we try to create adopt a structure of the minimizing the fraud, board of directors, corporate governance, communicate policies. All of this is kind of what we call control environment, whereby for system we try to develop security policies to guide and design specific control procedures, and to implement change management controls and project development acquiring equation of controls. Then we have also develop strong internal controls, segregation accounting functions, use proper design of forms requiring independent check and reconciliation of data. For system side, restricting access, system authentication, implementation, computerized control over the input, processing, storage, and output data, using the encryption, fix software bugs, and update system regularly, destroy hard drivers when disposing the computer. Also, in the side of organization or organizational control, assess fraud risk, external and internal audit, fraud hotline, whereby for systems, audit trail transaction through the system, which is through the transaction log file, install fraud detection software, monitor system activities, user and errors logs, intrusion detection, and so on. Lastly, organizational level, we try to apply for insurance, business continuity, and disaster recovery plan. And then for system storage, backup copies of program and data files in secure offsite location, and monitor system activity. By now we finish chapter 3, or the topic 3, which is covering the ethics in general, talking about the behavior of the staff, and we discuss also the business environment, the ethics in business environment. We discuss how the management should controls, and we discuss the fraud behavior, and we also cover the three triangular factors of fraud, which is the justification, the incentives, and opportunity. We discuss also the classifications of fraud in business environment, which is either the employee fraud or the fraud by the management. We also move to discuss in details the fraud in computer fraud. We also discuss the internal control system based on COSO framework. We discuss the 5 component. We talk about the control environment, assess risk, assessing the risk, control activities, communication and information, and then lastly monitoring function. And then we move to the IT control. And in IT control, we classify it into two main dimensions, application and general controls. And we discuss in details all of this. In the end, we give a good summary by comparing organizational and system controls. And I believe with this, we can complete and stop our class, and we will have discussion in the next week class, inshallah.